Good morning all, Camelback Trading 2724 coming to you this Thursday morning, June 4th. We're looking at the market profile of the SPY ETF here on Window Trader. Here is yesterday's trading. Here is Tuesday. The gap still in force. We went out with a price probe last night, which as of right now, with just over an hour to go, is being firmly rejected. We have jobless claims coming this morning. We have non-farm payroll employment numbers tomorrow, so we'll see this changing, I'm sure, as it's still a little bit before 8:30 in the morning. Again, I think it's healthy for the bulls to pull back a little bit. We basically reached my target for on the longer term for the time being, which is March's high, and I'm going to show you on the charts when we get there why I think that and why I think it's going to be vigorously defended at least the first time there. Although we were really there the first time yesterday, we got to within 60 cents of it. So let's go over destinations and a game plan. So right now on the upside, your first destination will be yesterday's high of, well, I'll take that back. Right now the pre-market high is 311.63. Trading at 310.94. So right now your upside destination would be 311.63. Then 313.22 yesterday's high. 313.84. That's March's monthly high. And above that 318.11 daily high. For the downside, unless something changes drastically, that price probe of 312.69 being firmly rejected. Then we have the afternoon pullback low, which we've been hanging around back and forth through it, of 311.13. Then we have yesterday's low of 309.94 and filling the gap at 308.13. Now, if they're able to do that, then we have 307.26, which was the price probe from June 2nd, sees high, and then 306.41 where we were 10 wide. Right now my pre-market low is 310.25 as we speak, right above yesterday's low. So what's the game plan for this morning? Well, right now, with just over an hour to go, we're looking to open in balance, in value, right around the afternoon pullback low. Now I'm sure things will change at 8:30. There's no trade for me right in here. Okay, the only thing to really lean on, yesterday you could say it was possibly a lowest accepted price. You want to take a long against B's low. You can take that. It's about 50 cents worth of heat to yesterday's low. Then you have a pretty sizable gap, right? That gap not going to be easy to fill the first time there unless we get a number that really disappoints this market. But so far, no number has disappointed this market. Even poor economic numbers and this market's gone up. So again, you can take a couple of call plays against B's low, if you out below A's low, and then somewhere again you could go long into the gap if we had to taper off. Remember though, by that time your value is going to be at least overlapping to lower. So again, you could wait for more market generated information. As far as a put play, if we're to rally, get up to the price probe, remember it was rejected. I was thinking about using a price spike from E's high. I didn't use it because we came back into it in K and L. M just barely got to it. But again, these are two levels you could look at. So it depends on what kind of heat you want to take. E's high to L's high. Really not that much. It's 60 somewhat cents. So you can start a short position right around E's high. I would add to it up to L's high. You get accepted above L, yesterday's high is going to fall. If you don't, well then you have a nice average price and then you see what happens if we roll over. Again, these are two early plays. This one's inside value, this one's below value. Doesn't really harm for market generated information to form. Plus you're going to get all the information if you're in my voice channel chat room. Okay, let's go to the charts. Now, this is why I think they're going to defend March's high. You have to realize the magnitude and the scope of how big and how vicious that move was down in March. Let's go back to October of 2008 when we had all that carnage, right? That move, now maybe percentage move it was bigger because we're only trading at 100 and change. But just look at this. That move was $33 the month of October of '08. The month of December, when we had that free fall, was less than a $47 move. This move in March was $95. That's pretty impressive. Now, more impressive is we've basically taken it all back in 2 months and a couple of days. Are they going to give it up that easy? Yes, we're one time framing up 2 months, but I said I'm calling this balance to up until we take this out. So I don't think they're just going to walk away, the bears, at this level. They might finally get overrun, but I think at least the first time there, and yes, you can say last night we were there the first time, but like I've said in the past, M period, the day of M period is so useless. That is just absolutely mindless algos just running wild. The next day M period is a lot more important. We've gone over that many, many times. So until we get back above at least E's high, where I was going to basically use the price spike, it's been defended for now. Weekly, still incredibly healthy. One time framing up 2 weeks. This would be week 3. Hitting a little roadblock right now up there. Right? As long as they continue to one time frame up, as long as they continue to stay above the 302.50 level, bulls are still firmly in control. Doesn't mean they can't pull back though. And the daily, well, right now, we're one time framing up 3 days. Gap is my main focus. Obviously, the bulls would like to hold yesterday's low, so they continue to one-time frame up. Even if they have an inside day, they wouldn't care. On the flip side, the bears, the first step is to take out yesterday's low, which stops the one-time framing up, and then to start attacking the gap. If you're able to do that, and then you're going to be in a 3-day balance. Good luck trading today. Have a great day. Come check us out at camelbacktrading.org, and we'll recap at 4 p.m.